7 minutes after 7, joining us on the line is Nesson Nayas, a portfolio manager at Sasfin Wealth. And we've also got Jameel Ahmad, who's the global head of currency strategy at FXTM. Jameel, I'm going to start off with you. We had comments from officials over the weekend about a no-deal Brexit that could possibly be. We're still not sure where it's going, but at this particular point, it seems as though Britain might actually crash out of the EU next year without securing a trade agreement. How are the currency markets handling that?
Good morning, and thank you very much for having me. Certainly, it's been another busy start to the week in the financial markets. You've got these concerns about a no-deal with Brexit, following these comments from Liam Fox, and obviously you've also got President Trump imposing sanctions on Iran, and that's really taken the headlines. When it comes to the currency markets, we're seeing a broadly stronger US dollar at the beginning of the week, which translated into some weakness for the South African rand and our other emerging market currencies. But the major headline was, of course, the British pound, which fell successfully below 130 for the first time since last July, and it now appears that investors are becoming tempted to reprice into the British pound a potential for a hard Brexit, because we are only a matter of months away now from the UK supposedly being able to leave the European Union at the end of March, but Brexit itself still remains quite a mystery, and nobody's really aware of how these negotiations are going, and they are dragging on.
Right. Nesson, I'm going to bring you into this conversation with all of the things that we're seeing around trade disputes, about a Brexit or no Brexit. We're not quite sure what's going to happen now. Are we starting to see, well, in the particular of the trade front, are we starting to see the disputes between the Eurozone and the US starting to take effect, or the disputes between the US and China in some of the data you may be reading?
Absolutely. Good morning, Nastasha. No, I think this whole Brexit story, from the time that it was announced, to now, has just had the effect of adding a lot more volatility into a market that's already so volatile. And with the US's initiative now to wage trade war with the rest of the world, I think that just makes matters even worse from a market's perspective, or from an investment's perspective, anyway. It's highly unlikely that the Europeans are going to, give the UK any sort of reasonable deal on Brexit. I think that was in the cards. I think Theresa May tried to deal a very difficult hand that she has at the moment. But my own sense is that from a market's perspective, it would probably make more sense for them to take whatever deals on the table and exit, and then deal with the consequences thereafter. And the reason I say that is it could reduce a lot of the volatility and the uncertainty as to what a potential deal might be. It's a difficult one, because the UK is quite close to Europe, especially on the trade front. But the consequences of this dragging out, another year post March, I think is going to be is really not going to be an alternative for the UK economy.
Jameel, in the medium to longer term, what's concerning you over developments on that front? And I suppose if you couple that with some of the comments from the Bank of England's Governor Mark Carney warning that the odds of a no-deal Brexit are uncomfortably high.
It's certainly a major weight on investor sentiment and market sentiment, and to be honest, Brexit remains as much of a mystery today as what it was following the EU referendum vote in June 2016. So this has dragged on now for over 2 years. Nobody's really that aware of what's going on. Not much progress has been made at all when it comes to negotiations. And when it comes to the financial markets, particularly the British pound, remains very sensitive to any Brexit-related news. And there's no end in sight, basically, because nobody really knows how this is going to conclude. Time is sharply ticking, and these comments from the Bank of England governor that the odds of a no deal are uncomfortably high are not incorrect, because this has dragged on for such a long time, and nobody's really aware of how these negotiations are still going to pan out.
Right. Nesson, we had corporate figures out yesterday. Which one of those caught your attention, considering that we are expecting Nedbank this morning?
Yeah, so ABSA kicked the banks off yesterday. It's interim results from ABSA, Nedbank, Standard Bank, and then we'll see final results from FirstRand in September. To be honest, it wasn't a great start to the bank's reporting season. In the combination of things, ABSA is obviously dealing with the separation from Barclays, so its own Brexit, in other words. The headline earnings were excluding the effect of the Barclays exit was up 4%, including it was down 4%. In a bit of spotlight from Africa, Africa's turned the corner, it seems. Earnings were up there about 8%. It was the best result. Of course, corporate South Africa for ABSA was down about a similar amount. And the retail banking sector, just up about 4%. So earnings growth less than inflation at the moment. The bank is trying its best to enter new markets to try and bolster its position in Africa, which, it sees as a significant growth area going forward. But for the moment, I think the lackluster SA economy weighing very heavily on banking profits, as we expect to see it. It's nothing unusual. We'll look for Nedbank today. They will have a big swing from last year because of the impact of EcoBank, its African operations, turning into profits. But I think a lot of people will look very keenly at the South African loan books, particularly the vehicle and asset finance loan book, the mortgage book, the personal loan books, and a card business, to see what sort of activity, how those have grown, and how they're managing defaults on that side. So interesting result today, I think.
All right. They've actually just come out on SENS, and I know you're on the phone with us, but just glancing at them quickly, headline earnings of 6.7 billion rand, increasing 27%, and a return on equity improving to 18.4%. They are acknowledging the fact that slow revenue growth and a gradual increase in impairments were offset by good cost management, and they maintained a strong balance sheet. But this is just me having a quick glance at them, haven't got into the intricacies of the actual figures. Gentlemen, I'll start off just before we wrap up. Jameel, what will you be keeping an eye on during the course of the week?
Look, there's still some economic data that's scheduled to come out and some policy meetings, but to be honest, the market sentiment continues to be driven from political news. Geopolitical tensions will certainly be in the headlight because President Trump has just imposed economic sanctions back on Iran, and there was quite a stark warning that anybody who trades with Iran during this time of sanctions will also face consequences. So I think investors will be monitoring this. Yeah. And of course, you've got this ongoing China-United States trade war talk that's not going to go away, and investors are still going to pay attention to this as well.
All right, Jameel, thank you so much for your time.